Hi there, this is Marc Jimenez, Wealth Advisor and Chief Investment Officer for CAM Investor Solutions. Thanks for joining us today. Today we have a couple of special guests from the West Coast out in Sausalito, California. Sam and Sarah Adams with Vert Asset Management. They are the co-founders of Vert. Sam is the Chief Executive Officer and Sarah is the Chief Sustainability Officer. And today I wanted to have them on to talk about a recent study that they performed on real estate investment trusts, but also in particular around the ESG and sustainability space. So welcome both Sarah and Sam, welcome.
Thank you for having us.
Thanks, Marc.
Of course, so a couple of things. I know this space has been talked about a lot over the last, not just 12 months to 18 months, but for the last decade especially. And in real estate in particular, there's a lot of things going on prior to the pandemic and even now. So what I thought would be great to hear from you is not just more about the space that you manage for your fund and what you do on a personal level, but also more about some of your experience in this space. And I think, Sarah, my understanding is that you did a recent study and spent some time on a project in this space. Maybe spend a few minutes talking about that.
Yeah, so we reach out to every company in the fund each year. It's called an engagement. And this year, given our current pandemic, we wanted to understand what a handful of these real estate companies were doing across the different real estate sectors. So it is like a mini engagement where we have a larger engagement coming up later this fall on net zero pathways. But given the urgency of our current situation, we just needed to get an idea of what real estate was doing in response to the pandemic. Who were their stakeholders? How are they supporting them? We identified their stakeholders as tenants, employees, and the communities that they work in or that they serve. That's a short overview of what we approached them with, and we got a healthy response. All 24 companies responded.
We got an amazing response, like 100% response level, which is unprecedented.
So, no, that's fantastic. And so I know there's different levels of engagement you have, but I guess one of the questions I have in general about REITs, especially with this area, is how are REITs supporting some of their stakeholders through this pandemic? Because I think I've heard a lot of different things in the space about what is or isn't happening. So maybe speak to that for a few minutes as well.
Yeah, sure. So, I mean, some REITs can do what others can't. For instance, for those who are office REITs, let's say, they can service their tenants in a different way than a shopping center REIT or a retail REIT would service their tenants. So one way in which an office REIT is servicing tenants, or even a residential REIT, is to help them through this situation by increased use of technology. So getting new tenants, or reconciling any kind of hiccups in this current situation, they would use technology more than they have done in the past. I think that's kind of a universal thing that we've seen. Increased use of technology is helping employees work from home, and that's across the board. All types of sectors of the REITs, maybe not including industrial REITs, where there are warehouses, or data center REITs, of course, already don't have a lot of employees working in the data centers themselves. Those would be considered specialized REITs. But the way in which they're engaging with the end user is through the heavy use of information technology.
It's important to recognize that we think of real estate as a narrow kind of sector of the broader equity universe, but sometimes it's more helpful to think of the real estate sector as a supplier to the entire economy, right? Because you have, as Sarah said, data centers, you have offices, you have shopping centers, you have multifamily resident apartments, you have health facilities, you have storage facilities, you have warehouses. And so in the pandemic, there's a huge variation in experience. For example, hotels and resorts were largely shut down, and so they're not really have been in business. Whereas obviously people are still living in their homes, so the resident apartments are still going. And there's been a massive increase, as Sarah said, in the use of data. So data centers, e-commerce facilities like warehouses have really been their business have boomed in this time.
Okay. And you mentioned a few of the stakeholders. I mean, what other stakeholders at the REIT level should people understand kind of exist? Because I think a lot of people don't understand how that ecosystem, if you will, kind of works, right, within the REIT world.
Right. Well, I mean, there's stakeholders across the board in terms of like supply chain, like any other sort of company, their governance structure, their clients, which in this case is the tenant primarily. Any sort for the data center, that would be, they are tenants to a data center. Actually, the data centers are the brick and mortar to the cloud. There's not actually a cloud. But the other stakeholder is that community aspect. So Sam mentioned hotels were shut down. So in a hotel situation that we found, those that were located in primary hit areas like New York City earlier this year, those hotels that were in midtown Manhattan or lower down in the business district of Manhattan, they were able to open their doors to the first responders. So employees that didn't, hospital employees or nurses, doctors, police, fire department that didn't want to go home. They had at least 90% of their hotel space to these first responders. So that was a time constrained period in which their hotels were being used at a lower rate than normal, but they could, because it's a building, they could service their community with that asset, and it didn't sit unoccupied or not used. A company has many stakeholders, right? But because COVID is a very human experience and has to do with human health, we want to understand how they were responding to their human stakeholders, as it were, their tenants, their employees, and the communities that they work in. And we were flooded with responses, and we collated all the information around similar responses. So I will say, while, REITs are not, innovating necessarily, there's no innovation here. It is a company recognizing that they employ humans. So there's a real attention paid to the human aspect, given the nature of the pandemic. I think by a company that you wouldn't normally think that those were at the top of the list. That sounds awful to say. But this is proved in that healthy buildings are now, not just a container for where you go and do business, but it's actually, people are becoming concerned about the air quality. There were plenty of studies beforehand, but now they're really coming to the fore that this is a non-negotiable that you need to have when you enter a building, which I think before was taken as like a nice added benefit, and maybe left to the space of the LEED buildings or a building with green building certification.
So a lot less shortcuts, it sounds like, are being taken or can be taken.
Yeah, and in fact, the tenants, right, are asking for long cuts, if you will. They want extra measures of cleanliness, extra measures of air quality. They want above and beyond procedures and policies to make sure that people are safe. And if that comes with an added health benefit for general use, that's great as well. You really see different responses by the different types of REITs. For example, on the residential REITs, the way to take care of their tenants was, some rent forgiveness, or waiving of late fees or deferring rent for a couple of months, some kind of financial support, because so many people were unemployed, right? Giving them a break until their stimulus checks came in or the jobs came back on. Some of the stronger retail REITs could also provide rent relief to the stores that were their tenants, so that they could come back online when the stores open back up.
We should mention that REITs are only 10% of the real estate market. And they tend to be very well capitalized. So the type of tenant you would have might be different than a single owned building,
right?
Residential building or apartment building.
We were surprised at the level of financial support the REITs were providing their communities and stakeholders, but it makes sense that relative to other real estate owners, REITs being public, they've had the discipline of the public markets to say you need to be well capitalized, you need to have low leverage, they need to have access to lines of credit, or they do have access to lines of credit. So we've seen big REITs like Simon Properties actually buy their tenants that were going into bankruptcy, so that they could keep them as going concerns. We've seen companies like office tenants give free rent to their restaurant tenants. You know, an office building might have a snack or a deli in the ground floor. Those small businesses would go away in a pandemic, but with some support from the building owner, they could make it through and then be ready to serve the office workers when they come back.
Yeah, I think it makes a real difference if they're a snack shop in a large high rise versus a snack shop in a strip mall.
Right. And that's where I think there's been a misunderstanding from people I've talked to, not just investors, but even professionals, that they assume, even right now in this pandemic, that some of these different real estate investment trusts, for example, are being significantly impacted when they may not be, because of, like you said, the structure between a grocery-based and a tall office building, which there's different protocols in place, and that's a good example. And you've seen the performance in that example in itself have dispersion, so that's good to highlight.
It's helpful to know the length of the rental terms, right? A hotel, the length of the lease is 1 night, right? You rent a hotel for 1 night, you're the tenant, and so a lot of those leases, if you will, went away because people weren't staying in hotels, with the exception of the replacement of the traditional hotel stayer with an essential worker, as Sarah mentioned. But in longer term leases, like, you know, a 5-year or 10-year office term lease, those leases are getting paid, right? The average REIT rental collection in office is north of 95% through the pandemic. And so those different experiences lend to different types of support that the REITs will give their tenants.
Absolutely. No, it's good. Those are good examples for sure. Kind of shifting gears a little bit, within an ESG strategy, there's a lot of focus, it seems, around environmental and governance within that, but less on social. Why is that?
Well, G had the best data. Going back, G was typically, you know, the number of independent directors you have, or who's on your board, or what kind of audit policies you have. So that the G data has always been there. So, and then E was the primary focus because there was a direct connection between energy efficiency and saving money on the utility bill, right? And there's all these technologies to quickly reduce your energy spend, so reduce your emissions, improve your environmental footprint, but also improve the bottom line, right? Very simply, change that LED light, save 90% of energy, right? And also on maintenance costs, you don't have to replace the light. But what's come forward is some research that a better building, a healthier building, actually has more productive workers. So what that means is there's less absenteeism, there's less turnover, employees stay with the company longer, and those costs, right, which we don't necessarily attach to the healthiness of the building, when you attach it to the healthiness of the building, you come up with some really dramatic improvements in the bottom line for companies. And so now they're starting to recognize that implementing policies like a family leave policy or work from home prior to COVID made a lot of sense of flexible working policies to keep employees happy.
Yeah, that's the direct connection between the building that you would work in and the employee, the person who's working in the building. And so now, I guess, even though people aren't in office buildings right now and they're preparing them for people to come back to work, you have that technology available that companies had to get on board with work from home and a policy around that and the IT support structure for companies to do that, to keep their employees productive. But where you started out with the healthy building just being an E, measuring the air quality, it's that connected piece to the S, to who's benefiting from that, the employee and hence the employer.
That's a good example. I mean, it sounds like you mentioned, Sarah, that in addition to work from home policies, COVID's, forced that obviously much faster and immediately, pretty much. What else has COVID caused with regards to change in that space as far as, more focus on all these areas?
One example that we got from the engagement that Sarah performed was some of the healthcare REITs who had already been focused on like in senior housing, the idea that community and social interaction was important for long-term health for the seniors. They've realized in the pandemic, this was even more important than they thought before, right? All of a sudden, family isn't visiting. So getting the seniors together and having a social interaction is just very important for their health. And that is actually also a bottom line thing, because rather than having to use medication and palliative care, you could be doing things just to increase the person's well-being. It's cheaper to do that rather than use medicine after the fact. And so that was a really interesting outcome of this healthcare REITs understanding how important that social interaction is.
That's great. Because I think I hear more and more stories like that, Sam. So thank you for sharing that. One thing I think a lot of us, and you highlighted it a minute ago about, look, we're in a pandemic. A lot of us or all of us are closed off somewhere, home or elsewhere. Given as we kind of eventually in the future, whatever time frame that is, move forward, go back to an office, maybe looking different. But what as far as, getting back to work, how can REITs help the economy get back to work? Because I think that's something that our audience, and including myself, is interested to hear maybe how that can happen or how that can be moved forward.
Well, REITs, being the owner of a building, if they are supporting the tenants and putting things in place like temperature sensing when you enter a building, being very transparent about the health and safety protocols that they're implementing in the building, and clearly communicating that to the users of the building, that will help tenants feel comfortable to come back into the building, and help the tenants themselves communicate things to their employees. So it is definitely a domino effect. Whereas maybe, in our portfolio, one of the key performance indicators has always been a tenant engagement thing. How is the owner engaging with the tenant? It's always been important. It's just right now it's highlighted the importance of that, maintaining that open communication to the tenant and the people using whatever building it is, the industrial building, the healthcare center. They have to be very clear to how they're opening their doors to outside people. But that's how we'll get back to work.
Yeah. And also the thought leadership and the research that's gone into this. Some of this stuff, a lot of it is actually new. One of the REITs in our portfolio, Boston Properties, actually hired an epidemiologist, Professor Joe Allen, who is an expert in the health and safety of buildings. And with him and with their tenants and with other experts, they built a come back to work program that then they published. It was like 30 pages on how to have safety, health and safety protocols in COVID to get people back into the building, whether it's the temperature checks or the elevator use or the cleaning programs. And they shared that with the entire real estate community. They had the biggest office REIT in the world. They had the resources to do the research. They went ahead and shared it with everyone, which we think is also critical to getting people back to work.
Wow, that's impressive. Because I mean, you mentioned a little bit about the notion of healthy buildings and what that entails. I mean, it seems to me like that right there, what you just said, is something that everyone is going to have to figure out, right? I mean, before anybody can go back, and so that itself, the largest REIT helping other REITs and just giving confidence, which is significant in itself to the audience of employees, owners of businesses, is going to be a mandatory requirement going forward. Anything else to add or to that notion of healthy buildings? Again, anything else that you're seeing, hearing, what's being talked about? Because I think that it sounds like of all the things, not the only most important thing, but it's pretty up there as far as significance for us going forward.
Well, I think it's the community at large getting used to these things being part of their daily kind of landscape, what they expect to see at a building, how they expect to interact with the built environment, period, having to wear a mask or having your temperature checked. There's been a real learning curve, but now we are up to speed, so to speak. So I think going forward, well, we'll just have to see how the pandemic part of that plays out. But now we're, I think, less afraid to go outside and to go into buildings, because now we have more knowledge, and through REITs that are leading with public display of what is to be expected, informed by people who know, that really, I think, helps people get out.
And I think that we haven't seen this yet in terms of financial performance or anything, but you could make a plausible argument that the companies that are leading in sustainability, like Boston Properties, who are on the forefront of developing healthier programs and better buildings for well-being, will be the ones that have the spaces people will want to come back to. They will be the ones that will be able to attract tenants, be able to charge higher rents, and be able to thrive quickly as we come out of the deepest part of the crisis. And so from an investment perspective, it's gratifying to us that we're invested in the leaders here, when we know that there's going to be some negative fallout for a large portion of the industry.
Right. That's interesting. I think that's not just offering a solution that helps a lot of people in a great way, but it removes some of the risk as well for a lot of those stakeholders, which you highlighted initially, right? Those stakeholders probably are going to be able to step back and say, you know what, we feel better about this subset who are doing it the way that we think is probably further along, and others, like you said, the laggards may suffer in different ways. So that's interesting. I guess one last question for you both is, and Sarah, maybe this is for you, I'm not sure, given the study that you conducted and all these interviews, anything else that really stood out that our audience should know about when it comes to whether it's REITs or anything related to that? Because I think right now this is a hot topic, right? Going back to work, going into a building, any building, whether it's office or anything like that. Anything else that sticks out from your studies or from the data that you collected during this study?
I think that the thing that sticks out the most is that employee engagement around companies recognizing that employees are people with lives outside of the office space, and that they needed to support these employees in different ways than just providing the IT technology, but they needed to support them with any sort of mental program, or even like group Zoom runs. We heard from one of the healthcare providers, but this work from home policy that I think many companies refuse to implement before this, coming back to work they recognize that people are still working. There is productivity happening. A person can be an employee and have a child around, maybe not all of the time, but that person's not, dead to them as an employee, that they're still a productive member of the team. And it's nice to see that replicated through these various industries, industrial REITs. We're talking just storage facilities, or light engineering facilities, a REIT that caters to government. Everyone's had to do the same thing. So maybe you would ascribe those to different types of personalities, but the unifying factor is that someone working from home can still be part of the team.
Fantastic. That's a great thought there, and I think a lot of people would probably agree with that and empathize with that as far as both an employee standpoint and from a management level. So again, Sarah and Sam, thanks so much for your time. Sarah and Sam Adams with Vert Asset Management. We appreciate their time. We look forward to having them back again soon. And thanks everyone for joining, and we'll talk to everybody soon. Have a great day.
Thanks, Mark.
Thank you.
Thank you.